Welcome to the Snapshot edition of the Daily Update. This is being prepared Thursday, March 31st. Well, I'll cover the action in the market briefly and then see how things look for Friday, April 1st. It was a pretty negative day. It didn't look like it was going to be that bad of a day, but the last 45 minutes or so really saw the market decline. Now the big question is, are we still looking at an uptrend? Or are we looking at a reversal? Personally, I think we're still looking at an uptrend. We didn't do a lot of technical damage, but why on earth did we see that decline on Thursday? There really wasn't any news. There wasn't any economic reports. There wasn't any catastrophe or anything that happened. Well, personally, I think it was not only the end of the month, but also the end of the quarter. And you had a lot of money managers out there shoring up their positions, and it just led to a lot of selling at the end of the day. It also did some good in that it wore off kind of our short-term overbought condition that we're dealing with right now. But we did have a gap lower right at the open. We saw a pretty slow day. Then selling increased just a little bit that took us down below S1. Eventually, we broke even below S1 down to support. But then that wasn't all that bad until right late in the day, we saw an increase of selling that took prices much lower, and we ended up closing down 1.57%. Even though we've been dealing with a below average volume environment lately, volume did spike up to average on Thursday. The technicals are still pretty positive right now. And we, as I said before, we're kind of working off the short and even slightly intermediate term overbought situation that we've been seeing in our charts lately. We still have earnings reports that are coming out, inflation, interest rates, geopolitical concerns. A lot of people are really freaked out about these inverted yield curves. And then there was some news on Thursday about oil supplies that supposedly OPEC is going to step up their availability of oil. And there's also been talk in the US about releasing some of the reserves. And again, whether that's good or bad is part of the overall debate. It at least helped oil prices decline a little bit on Thursday. So it was the last trading day of the month and of the quarter. The technicals are still positive and continue to improve. However, there was a little bit of damage done in that we closed below the 200-day simple moving average for the Dow, the mid-cap, and the Wilshire index. Russia-Ukraine is an ever-changing situation. Sometimes it's a little more positive, sometimes it's more negative. The same thing with inflation and interest rates, even though we're in a high inflationary environment now. China continues to have a lot of the lockdowns, and there's this concern about a recession or some kind of an economic slowdown happening in the future. So we have the different yield curves. Some of them are inverted and some of them are not. And then, as I talked about with the oil reserves and OPEC willing to increase output. On Thursday, we had the PCE price index. It was in line, but it was still a pretty high reading overall, which just shows that people are paying more and their income is not necessarily keeping up with what they're having to pay. The S&P continues to be overvalued when you look at it by itself, and yet still fairly valued when you look at it in comparison to bonds. Then as far as our trend, it is positive. We've crossed over, and I'll show a brief chart. Actually, I'll show a real chart that I'll discuss briefly in this video. And because of the down day, it is weakening. The bias continues to be negative because we had 2 negative days now, but the momentum is still positive overall. So here's just the daily chart showing how we were able to break up through this resistance. Well, we came right back down. And so is that going to act as resistance if prices start to advance out of this? And then here's the ADX showing our trend. we're seeing it decline. It was starting to turn up after Wednesday. Well, after Thursday, it's declining a little bit, but we're still above 20. We saw the green line come down and the red line go up. If we can see follow through upside on the chart, that will probably turn the green line back up and could strengthen the ADX. If we continue to fall and these two lines get closer to each other, the ADX will also start to decline, and we're not really that close, but we could be in danger of getting into a trendless environment. I bring up the moving average tree chart here, looks like spaghetti, where we've fallen back below the 100-day moving average on the S&P. The Dow and the other indexes that I mentioned actually fell back below their 200-day moving average. Here we're showing the moving average rainbow, where we're kind of coming back into that a little bit. On a long-term basis, we are still positive because even with the decline, we are still above the 200-day moving average. The 200-day moving average is at 44.84, and we closed at 45.30. So we're still above that. Then another chart that I go into more of a discussion with in the full length daily video. These are all the different yield curves. I just put them on one consecutive chart. And then above is the S&P 500. So you can see when we went inverted, what happened to the S&P after that? Well, way over on the right side, we're not inverted with some of our yield curves. The 3-month, the 10 to the 3-month, that's actually going up. And if you look at the 10-year to the Fed funds rate, that's also going up. So we're seeing a real contradiction right now overall. And this is part of the debate and part of the confusion that's happening. We do have a couple of our yield curves that have actually gone inverted right now. So that's just part of the concern. And if you want more of an explanation, I go over that in the daily video. I'll also be addressing it in the weekly video that I prepare over the weekend. So what is the outlook for Friday? Is it that our short-term overbought readings are being worn off? Yeah, you can make a case for that. And if you want to see a lot of the charts, please check out the daily video. The markets still remain in an intermediate term range. There's still the battle between growth and value. There's still some of the yield curve concerns, and that will go on until it kind of wears off the news cycle. And then what's going to happen with oil supplies? Is oil going to continue to go up? Is it going to go down? The big report coming out is the employment situation report. That's the biggie each month. And that'll be coming out at 8:30 a.m. Eastern time. We also have the ISM manufacturing index, as well as construction spending. And then we have the different geopolitical events. What's going on between Russia and Ukraine, China with the lockdowns, and what's that going to do to the US economy? The yield curve, is it going to go more inverted? Is it going to come out of an inverted state, depending on which one you're looking at, and what is going to happen with oil? So here are the different scenarios that I'm looking at. If we're looking for things to go down, and right now I'm going with A. This is where I personally come out. Short term, we were overbought and we're hitting some resistance. So is Thursday's decline a reversal or just to wear off the short-term overbought condition? I'm going with the latter right here, that we're just wearing off an overbought condition. Now that could change if we see a lot of continued selling and real decrease in prices. But from what it looks like and going through all the charts, I think that we're just having a short-term dip before we get set to go higher. Rising interest rates. They've been declining over the last couple of days, but if we see a real spike in interest rates, that could send some shock waves into the market. And then, of course, the yield curve concerns. Then we're going from this disbelief where we were coming up out of that base. Well, once we got above the 200-day moving average, especially in the Dow, now it looked like belief, and lo and behold, what happened? We've spent the last 2 days stalling out. They were actually negative days. So there's this, okay, I didn't believe it when we were going higher. Now that I do believe it, it stopped. And see, that's how the market likes to play with people sometimes. So will the sentiment turn more negative from here? Now, if we're looking for things to go up, we are seeing strength after coming up out of that base. The oscillators are still pretty much positive. The moving averages are providing either support or resistance. And then this back and forth is it can't go higher, it can't go higher, and then it does. It can't go lower, it can't go lower, and then it does. So you have this back and forth battle that really wrecks with your emotions. Sideways, we're really only concerned with this if we see the ADX dropping down below 20, and that has not happened yet. So what is our conclusion? The S&P continues to be positive. It could be breaking out of a range, which means that we've set that base and we could be getting set to go higher. In the short term, it remains positive, but we have overhead resistance now. Intermediate term remains positive. Our oscillators are positive. Some of our moving averages, if we fall, could be providing support. If we go up, could be providing resistance. And we're long term, we're still positive because we are above the 200-day simple moving average. Now, just to let you know, some of the upcoming videos that I'll be doing after Friday's session, I'll do a daily video, which will also include this snapshot video. Then over the weekend, I'll be doing a weekly video. And since we're at the end of the month, I'll be doing a monthly video. And I'll be covering one video that will talk about the markets, another one where, and this is pretty ambitious, I'm hoping that I'll be able to do these videos, one that goes over the economy. I'll also be doing a video about the different sectors that make up the S&P. And then I'll do another video about the international look, just looking outside of the US. So thank you very much. If you want a more in-depth explanation, please go to the daily video and please tune in to the weekly and monthly videos as I post them.